If price ever feels random, you're usually missing one thing: clusters. Tonight, we're breaking down key level clusters, stacked levels where big decisions get made. One level can cause a reaction, but when levels stack, that's where the real big moves happen. Let's get into it. Welcome, everyone. So good to have you with us this evening, Tuesday night. Guys, we are counting down. I can tell you, Dad and I are talking every day, working crazy hard night and day on getting this new thing ready for all of you. So if you've missed it, thank you so much, firstly. So I created a Facebook event last night for our event that is happening on the 28th of Feb in Auckland, Saturday 28th. And so loads of you already RSVP'd to that. That is the open RSVP for all of us, plus anyone else that's coming along that's not part of our community. So I will put something in our group chat in the next couple of days to make sure I know who's coming to what, because we're starting at about, I'll confirm the time, 11:30, 11:45-ish, at a cafe walking distance from church where we usually have our events. So everyone can park there, walk from there. It's a real short 3-minute walk, have some time, have some lunch, and then go back for the main event. And that'll segue into a deep dive double session after that. So if you could, I have put it in I'm clicking it on the chat right now. There we go. And on the Zoom, and I'll stick it in our group chat later. I made a video and posted it today, just a little one on Instagram and on Facebook. If you could please do us a favor, drop some love, drop anything, any comments you like on those, whether it's I'm going to be there or I love the last one, whatever, just to give us a little bit of organic social, whatever you want to call it, so some people can see that. That'd be really awesome. We know it's a great opportunity for that first hour that we're going to be having between 2 and 3 for the general public to be able to come and hang out with us. So please drop some love on those reels. That'd be amazing. And aside from that, no more need for me to waffle. We're working hard behind the scenes. We want to get this in your hands. And so Dad's biggest challenge in the midst of that is to give us some training right now that carries over into what's next. And I tell you, I know he just can't wait. So anyway, enough from me. Dad, I'm going to find you, pin you, and we're going to rock and roll. Where are you? There you are.
Here I am.
Found you. There
Cool.
you are. Well, thank you for consistently going deep, finding things for us, because I know most of your effort is going into the event and post the event, but I know you've still got some wonderful things for us tonight. So I'm going to get myself out of the way and hand it over to you. Thank you.
Cool. Thanks, Ty. I won't need to share my screen yet. I'm going to waffle on a bit, but good to have all of you. Nice to see so many people. 26 people. That's awesome. Well, welcome. I know from around the world, from the Netherlands. I can see Mark there. Welcome. And Elise from up north. Nice to have you. And Mike down in the bay somewhere. That's awesome. I can see many faces and your name. So cool. So we're going to jump in tonight. So as Ty said, the challenge has been for the last number of weeks is to give training on stuff that we're going to carry through into what's going to be released in a couple of weeks, or just under 2 weeks' time. So very exciting. Man, I'm so excited for what's coming. You guys have no idea. It's going to look a bit different to what you're used to, but it's going to be good different. It's going to be a real game changer. And so even tonight, what I'm sharing is like so relevant for the new, but it is kind of slightly watered down because I can't show you and tell you everything. So it's going to be good, but it's not going to be everything. So I want to say too that that where we're headed, that there are going to be a lot more opportunities to trade, but that is going to take patience and discipline, of course. You know, I've been saying, for a while, I say quite often, you don't need to do 100 trades every time you get on the charts. You only need 1 or 2, good trades. That's all you need to do, 1 or 2 trades, if you can discipline yourself. And that's why if you're only going to do 1 or 2, you've got to be patient for the right setups. The way things are going for me, I just need 2 or 3 trades a week. You will find you'll get much longer trades. When you start following where we're going, you'll find confidence to stick in trades longer and pick up the big ones. I've been hitting I think the best I've done is 140 pips. I could have gone further, but they've been 80, 100, I have to be transparent. I've loaded my lot size because I've been in test mode, still using my live account. But I tell you what, you are going to pick up a lot of people will be posting a lot more bigger trades. So, the key is patience and discipline. And what I'm going to share on tonight really is a real key. So I use the expression stacking, that's kind of, I think, the professional word for what I want to talk about tonight. So basically stacking is just where independent key levels overlap in the same price area to form a cluster of levels grouped together. So if you can remember that, all stacking is when you get all these levels that kind of overlap and appear in the same place. And when they get grouped together, we call it a cluster, or stacking, you can call them both, but really stacking is simply we get a cluster of these key levels. So there's not one reason for price to react, but multiple. And unfortunately tonight, I can't let all the beans out. So I'm just going to focus on a few things, the POC, big round numbers, some pivots, just S3, S4, R3, R4, and maybe some EMAs and that. So there'll be a few things, but I tell you what, where we're going, you're going to be learning new levels that are absolute dynamite that cause the big move. So I've got 8 points. So the first one is a bit of my definition. So just what stacking is. So basically think of it as like decision territory. It's where it's not just a line, but it's like an area. And I'm going to try to show examples. Unfortunately with today being a holiday in the States, I mean, the charts have been a bit muted, but I see there's a bit of a move this afternoon. So I may look back at some examples just to illustrate what I'm saying. But this is the key to look for. So don't just enter a trade if price rejects one line. Be patient. Wait for a group of lines. Wait for stacking, because when price rejects a stack, that's when it moves. Okay, so that is the key point. And so the next point, number 2, I've got 8 points. I'll list them as I go. This is another key I've realized is the more unrelated the levels are that overlap, the more powerful the moves are. So the more unrelated. So we're not looking for sometimes, for example, pivots. You may get a weekly pivot and a daily pivot and a quarterly pivot, in a stack in a sense. That's not so powerful because they're all related. Sure, that can definitely cause a move. But when the levels are totally unrelated, so I say unfortunately tonight I'm just using some basic ones, but when you get a pivot and an EMA and a big round number, POC, those are what we call unrelated levels. When those are together in a stack, that's when price really moves. That makes a strong stack. And the reason is because those are like order levels. And we're going to talk, our language is going to change as we introduce where we're going. But that's where order flows are converging. That's where orders are stacking together and converging. And that's what you want. You want multiple orders converging in the same place. That's where the big moves come. And it's not coincidence. You may think you're looking at the chart, and again, we're just looking at the basic ones tonight. You may see a big round number, maybe it's a fib, or there's a higher time frame EMA, thinking, gee, what a coincidence. But I'll tell you what, you'll learn those are not coincidences. That is how the market functions. It's just how the market functions. When these things stack together and you get these clusters, that is the market operating. So we always be looking for stacks. So with what I say, what I'm showing tonight, it's more the low quality ones. We're not revealing the big quality ones, but the big ones. And man, I have done months and months of research, months and months of testing. When you find out what the high quality ones is, your trading honestly will never be the same. So that's number 2. The more unrelated the levels are, the stronger the stack. Then number 3, you'll learn this when you trade, is that stacking creates gravity. It's just incredible. You'll even see just in some examples, I'm just looking at the NASDAQ tonight, it's like stacking really creates gravity. Price is really random near stack levels. Price is being pulled towards them. And so when you got these stacking, when you get these clusters, price is being pulled towards those orders where the big money is. And that's what we want to do. For a lot of my trading, I think I've traded well, profitable, using what we've had, but I haven't always pressed buy or sell where the big money is. And that's going to be the difference where we're going. When we press buy or sell, we're going to be confident that there's big money there and that the trade is going to move. So often what you see is so I'm talking about stacking, it creates like price gravity. Price, it's like magnetism. Price is attracted to these levels because that's where the orders are sitting. So often you see price accelerating into that zone. Sometimes it's accelerating, then there's low momentum. Sometimes you see big wicks, and after that you see expansion going the other way. And so what we've learned, we've said, we used to use the phrase, has price rejected a line? But I think you can see where we're going. We've been changing our language to prepare you for where we're going. We want to see, rejection of levels. The rejection of levels means multiple things are stacking up. So a single level can, cause a reaction. Price may bounce off a big round number and cause a reaction, but it's stacking that causes the move. When you get clusters of these key levels, that's where the moves come. And that's where you see the 100 pip moves. is when there's been a whole lot of stacking together and price, shifts in the other direction. And that's what we want. That is where large players are waiting. So it's not random. That's why, I've learned a whole new level of patience while I've been testing and then, trading on a lower lot size, still with my live accounts. I've been becoming more patient, far more selective in terms of where the big money's sitting. So that's what we want to train you guys with. Where we're going is, where's the big money? Where's the orders? Where are the institutions? We're also going to show you where hedge funds have how hedge funds trade, how pension funds trade. All my research, I've dug it out and found out, and man, it's exciting how those moves get triggered. That's where we want to trade from. So again, the point number 4, like a single level, a single line, that can cause a reaction, but stacks are what cause the moves. And where you get these high level stacks, high quality stacks, high quality levels, that's when the big moves come. That's why you can be patient and wait for the big moves. All right, then number 5, I've got 8 points and we can look at some examples. Number 5 is, stacks also reduce randomness. And that's why I've changed the way that I think, I'm thinking, when I kind of was getting an idea and still learning this and researching, I used to kind of ask, will price react here? I was expectant, but I've changed the way I think now. Now I say, why should not price react here? So why should price not react here? So that's quite a psychological shift. So whenever I'm seeing price heading towards a cluster of these key levels, and I say, unfortunately, tonight, we're not showing you the big ones, but when I see price heading towards, that's when I say, now I'm going to be patient and I'm going to wait until price hits that zone. And then again, we want to see price rejecting levels for our moves. And that's why we get our patience. And so that's what I'm looking for. I'm looking for clusters. I'm looking for stacking to take place. And when price rejects, the stacking in those clusters, that's when it moves. So also what's important that, stacking, clusters like a location tool. I want to say this and I'll explain it, not just an entry trigger. So we don't want people just pressing buy. Okay, prices now hit a stack. There's a few lines there. I'm going to press buy. I'm going to press sell. We've got to wait for price to test and reject. All right, so that is something we're going to emphasize more. We've been throwing this kind of terms out, but we really want to see price testing and rejecting these levels. And once price rejects, boom, that's when it goes. So basically, it is a location tool. It draws us. Location comes first. The confirmation is through the rejection. But I tell you what, that's what we need to look for. And then, once you see it, you can't unsee it, especially the way we've laid out what's coming. I wish I could show you now. It's going to be so clear about where to enter, where not to enter, and where to let it run and when not to let it run. That's the key. It's going to be exciting, man. You're going to enjoy it. Then number 7, this is actually got me on this journey. Some of the things, I did get that picture, that vision I saw like a while back of these bands that that are very much in it. But I think Ty knows, and I've said this many times, what really started my journey is, why did price stop there and go the other way? And that's why I began to go dig it, because I noticed sometimes, our EMAs lined up, we had a good signal, then suddenly, price went the other way. And I knew there had to be stuff I wasn't seeing. I thought I was seeing everything. And I say, look, we're profitable with what we're doing, but this is taking it to another level. So stacking, these clusters explain what I used to think was mysterious reversals. I said to Taji, it's sometimes like at random times of the day, like in times of low volume. Like sometimes, I'm just going to make it up, 4 o'clock in the afternoon, suddenly price bolts, 100, 200 pips the other way when there's meant to be low volume. The reason is because there is a key high quality level there, or levels that have stacked together where orders have been placed. And that happens so often. These things line up often at unusual times of the day. Sometimes at 7:30 at night, suddenly there's this massive move. And to me, these were like a mystery to me. So I used to call them like almost mysterious reversals. But once you begin to see where these levels are, you realize, that everything happens for a reason. So I used to think, wow, price reverse for no reason. Things lined up, the EMAs lined up, I pressed buy, I stuck to the rules, then suddenly it went the other way. So most retailers, and that's like part of the shift you're making, we'll talk more about it on the Saturdays, that we have been trading like retailers, which the majority of people actually trade, not like professionals. And so retailers, I was thinking more like a retailer, the way I was positioning ourselves and the way I traded, not like a professional. And so retailers would say, wow, that's like a mystery. Why did that reverse? But professionals would see that. They wouldn't see that as a mystery. All right, then the last point before we get practical, that great traders don't chase price. They wait for clusters to occur. And that's the shift I've been making while I'm doing this research over the last number of months. I'm not chasing. I'd be like chasing. Whereas professionals, they're looking for where the orders are. They're looking for where these key levels are stacked together. So when I look at a chart now, yes, I'm looking at where price is, but I'm looking at where's price moving towards. And if it's in an uptrend, I'm not going to enter late. I think where's this trade likely to go to? And where are the clusters where price could hit and potentially reverse? And so I'm not like hunting. I'm waiting patiently. I'm relaxed. And I'm waiting for price to come into a zone where I believe that it's going to go the other way, or else a continuation. We'll talk about that at another time. But you can just stay relaxed. It's not stressful trading like that. You pick up these zones where the money is, wait for price to get there, then you execute your trade. So I mean, basically, when levels stack together, that's where probability stacks. And again, the market, it's not random at all. I used to think the market was quite random, but it organizes itself around all these key levels, around where big money is in agreement. And that's what clusters and stacking show us. They show us where agreement lives. So that's basically the theory behind it. And now we're going to look at some practical things. So Ty, can I share my screen? Let's just see send request. Okay, I've sent a request. Okay, am I ready to share my screen? If I click share now, there we go. Hopefully this is the correct one. Share, there we go. Right, I'll move some faces out the way. And let's look. Now again, I want to say that what we're looking at here is not the top of the range levels. These are ones we're aware of, but it will still nevertheless show you just the principle of what I'm saying. But of course, when we unveil the new, it's going to then take it to a whole nother level. So here we're just looking at the NASDAQ, and here this is a 100 pip scale. I always like to look at the scale. And we can see, look at this move this afternoon. I mean, once price broke out here from this candle, I mean, that dropped 143 pips. That's quite a big move for this time of the day, which was this is like around 3 o'clock this afternoon. Where's that breakout? Just 10 to 3 or so. But we can see here, look what happened. So leading up, you can see what happened. Now you'll see this, once you begin to see this, you can't unsee it. So price moved up, okay, it rejected. There was a tiny cluster here, a big round number, and here's my 618 fib. I just put a fib, this is my zoom chart. We can see price meandered up. There were a few levels in the way. So price rejected this level. Then we had the M15, 15 minute, the lower line, the support line. There was a weekly fib there, big round number, and these are close together because of the range from the public holiday. That's the M15 upper level. You can see our price meandered up here, and then it hits. Look at this zone over here. Can you see? This is what we would call a cluster or some stacking. So now these are quite far spaced apart. It's been a rangy day, but if you look at this level here, let's just move it in from where price kind of broke in over here. You can see multiple levels stacked together. You can see here we've got this green line. Now, it may not all be clear on the video. So over here where my mouse is, the crosshairs, there is a daily pivot. There we got a monthly pivot. We've also got the 233. And then lower down, it's a little bit far away than what we like, but there we've got this is the resistance line of the 15-minute opening range. So we can see this is a cluster. And you can notice what always happens when price hits these clusters. This is where big money tends to sit. And they're all waiting. And there's accumulation, AMD, accumulation. Sometimes there's manipulation and then distribution. But a lot of accumulation takes place here. So you will always see before a big move, you hardly ever see a big move go up, hit one line and come down again. Generally, in this case, we've got a bullish range and then a bearish move. You get this accumulation where price tends to go sideways. That's why you need patience. So if you were in a trade down here, if you just turn on your computer here and you're looking at the charts, you would see these are quite far spaced apart. These levels, there's a level, there's a level, there's a level. Obviously, when the market's really moving, there'll be bigger gaps, but it's rangy because of the public holiday. But my eye would immediately be drawn to, if price is moving up, where is it likely to reverse or accelerate? And then obviously you look for this kind of zone here where in this case, you've got 3. If we include our M15, we've got 4 things. So you can see the patience that's required. So from that first candle that kind of broke in the zone until the candle before, that was how long? That was 43 bars, 2 hours. Is that right? That length of range? It spent 2 hours in range. But you can see what happened once. And you can see again the testing. You can see the key levels here. And look at the testing. Price is testing above, below, above, below, above, below. Multiple testing takes place. And so before I was getting bored, thinking could range forever. Now I'm looking in the zone. We're in range. Why are we in range? Well, I tell you what, accumulation is taking place for a breakout. And you can see again, all this testing that's taking place. Think of with a bow and arrow, think of I don't know if you can see my face, but the further you pull back a bow, the further the arrow is going to fly. And this is what's happening. It's like the move is busy loading up. And you can see what happened when it finally broke out. You could say in this case, let's say this was a little bit spaced apart than what I would have liked, but we can see this is the M15 high. That was the breakout out of a lot of this accumulation and range. We can see, look at this, even though it was like 2:45 in the afternoon, price dropped down 143 pips. So, that's a huge move. But again, once you see the accumulation and the breakout, your faith will go up for a bigger move. So that's the basic principle. So let's look at a few others. So what I'm going to do, because this morning was public holiday in the States, I want to go back to Saturday. So where am I looking at? Let's go to Saturday and see what was happening. So I've left that trend line there. I drew that earlier. So what I'm going to do is let's just look at, I'm going to turn on my replay feature and just load it. Let's take it right back here to see what is happening first. Then we'll play it out and then make some comments. And again, I've stripped back the indicator on purpose. I've just put the key levels on. So you can see here just this move before. So if we're looking, this was obviously the open. You can see this massive stop hunt. And generally, whenever you see a wick, boom, going down, generally the stop hunt, it's always down to a key level. So this time is the big round number. What's that? 24,500. And so again, we can see a little bit of stacking even over here. Now, of course, this was a bit of a rangy start, so it's not a great example, but let's just highlight this area over here. So this was around the open on Saturday morning, and look at the stacking that's taken place here. Can you see we've got a big round number? We've also got the 618 fib. We've also got a daily pivot, plus we've got the VAL. So that is the value area low of our POC. And I want to say the POC is going to be massive. You're going to look at the POC completely differently. I won't give any more away, but you're going to get a lot of money, a lot of wins off the POC. But again, although this is a bit of a mess because of the open and the EMAs weren't perfectly aligned, we can see, look at this, there's 4 different levels. So that counts as stacking taking place. And after that, look, there were pullbacks, but price bolted up how many pips? Almost, we'll call it 200 pips. And so we can see already from the open, boom. And again, remember what I taught with the POC is when you've got the POC, in this case, for a bullish move close to the VAL, and the VAH is high, that often produces the move up. So if we just overlaid, here I've got it here, the fixed, if we just put on the trading view, you can see it should produce a B shape. Yep, that's exactly what I thought. Look here. So when you've got, these are called nodes. So when you can see most of the concentration is way down at this level here. So this is a B shape. So when you got most of the nodes sticking out at the bottom, that's often a sign that price is going to move up. So when I look at the POC, I'm looking at the shape. I'm looking, if it was halfway through, that would be more in a balanced position. But whenever the POC is close, in this case, to the VAL, and it breaks above the POC, it rockets up. It's the opposite. If the POC is close to the VAH, the value area high, then you've got what I call a P shape, and then it often bolts down. So let's just let this play out, and then we're going to look at the main thing I want to look at in this example. So I'll just press pause. I'm using the playback feature so we can get just all these levels plotting. So let's have a look at what was going on here. So I'll just let that play out. And then I'll just press pause. I'll just let the whole trade play out, and then we're going to just analyze it. Okay, now that falls off a cliff. Kaboom, down we go. And I'll just stop it there. So, okay, here we go. So let's have a look what's going on here. So here we can see, I mean, this is a huge move. So once kind of price, well, let's take it from here. Once price broke below that area, that fell 175 pips, big move. So let's analyze what is going here. So we had that first move up, price pullback, and again, almost like a second cluster over here. If we highlight this area, we can see, and I tell you what, these are not even now there will be other levels that would show themselves here with the new, but you can see again, look at what's happening here. We've got a monthly pivot there. We've got the M15, the resistance line, the upper range. We got a big round number. We also got the 233. The 233, I think, is the most important moving average in trading. Price respects that more than any other moving average. And of course, we love the 987. So you can see again, what produced this move was, you can see all the stacking that's taken place. Price breaks out. And then, of course, that moved up how many pips? 150 pips. So you can see stacking always produces big moves. So it's kind of like we've got to be aware, because we haven't paid a lot of attention to what moves should I stay in for longer, what moves should I take the money. I tell you, when it's stacking, it's worth being a little bit more patient with your trailing stop loss. Don't move it up too quickly. But again, this is very typical price action of how, price moves into an area of stacking. And again, we haven't got everything here. There's just enough to show. But often you'll find that price moves quickly up and then it moves sideways. So again, let's just delete this zone here, and we'll draw another zone. So if we look at what's happening here, again, this is slightly wider than what I would like, but I'm just pulling some examples out to illustrate this. But you can see there's a lot going on here. Firstly, acceleration up, and then price begins to move sideways, although there were like mini moves within the sideways move. But again, once price got into the zone, let's just name the zone from, let's just move it across here. But you can see what patience is required. And let's say the breakout, that was the breakout candle there. Again, patience equals pips. So this ranged for how long? 2 hours, 15 minutes. That's quite a long time. But if you're patient, the moves come. So, I mean, big patience equals big moves. So always look for a big move one way, sideways action, break out the other way. Now, again, sometimes it will break. There'll be what's called a continuation. So the examples I'm looking at are reversals. And again, with where we're heading, you're going to be trading in both directions. So this would be called counter trend, but you're going to learn how to handle counter trends with what we're going to show you. With what's new, going to be way, way safer. But again, look at what's happening. And look at this amazing cluster or stacking that's taking place. We got a big round number. We got 24,900. We've got the VAH. Look how price tested those levels. Then we've got the 987. And again, the 987 is massive for reversals. Huge. So whenever price hits the 987, also the 233, the 2584, I mean, that's way out of play at the moment. Those are huge. That's why we've got them in our strategy. You can see again, we've also got the POC. Plus I drew a quick fib. That is a 50% fib, from a daily chart. So we got 1, 2, 3, 4. We got 5 levels. And again, these are slightly more spaced out than what I would like. So this range is a bit bigger than normal, but nevertheless still forms stacking. So whenever you see again the stacking, price is moving between. So the upper part of the stack was the big round number. The lower edge of this range or the stacking was a 0.5 fib. And you can see price, upper level, lower level, upper level, lower level. And then here it made a lower high. So look for those things too, you know. In a sense, this was almost a head and shoulders. It just makes a head and shoulders. You know, we look for shapes too. Don't forget all we've taught about with chart patterns, very important. But when you start seeing this example, you see a lower high, that's telling you something. Price failed to break above 3/5 of the stack we're looking at. So it couldn't break above, over here, the lower high couldn't break above the 987, couldn't break above the value area high, neither could it break above the big round number. That's telling you that the sellers are highly likely in control over here now. They're going to push price down. And sure enough, you know, with the kind of head and shoulders, I always like to draw a trend line. We can see price broke a trend line and also broke the 50%. And again, what is this trade? This rocketed down. How many pips was it? That was, what did I say? 100, called it 175 pips. So you can see why patience is important. And I've on the 3-minute here, and it's easy to see if you put the 1-minute chart on, you know, the range would have gone across the whole screen. So 3 minutes, very good to identify the range breakout. So maybe let's look, we're doing well for time here. Maybe look at a couple of other examples, see if we can fish out. Let's go to the previous day. This was a huge move over here. Let's see what we can see. And we'll just move our replay. Let's move this back so we can get the current information. We can see this big breakout that took place here. We can see, so the open, of course, the open was around here. Where's 330? That was the open. But again, look at all these levels. Now, again, not the perfect example, but we can see here. Let's just highlight this area. And we can see the top level was a daily pivot. And let's just highlight this whole area. Look how much is happening here. So we can see a lot. We don't see as much range, so not a great example, but still we can see we've got a pivot, we've got the POC, we've got the 233, we've got the lower range, the 15-minute support line, we've got another daily pivot, plus we've got the 987, and we've got the 2584. So you can see now there would have been, I can tell you now, there would have been other levels here we can't show you yet that would have made it far more clearer. But again, whenever you see a concentration, I mean, this was huge. This move, I mean, that dropped off a cliff. There's 430 pips down there. But you see the rejections always cause the big moves. Let's just cancel this and let's have a look at, we'll leave that. And let's just look at the Dow and just see if we can pick up some examples. Look, this is also today. So let's have a look. What time was this? This was around 1 o'clock today. You don't normally get big moves. You know, often the volume is very low. And again, there would have been other key levels here. But look what was happening here. So obviously this was the close of the morning session. And we got the reopen. 12 midday would have opened where? 12 o'clock was the open there. And again, let's look at this area over here. Now, I wish we could show you everything, but we can't. So here we got a bit of range. This is a good example of more range here. So what are we seeing here? We're seeing this is the 236. What is about 236, a daily fib level. We've got the 987. We've also got 49,600. And we also have a daily pivot over there. Plus, we've got the range. So let's just drop this a bit lower. We've got a lot going on here. Plus, we've got the support level for the 15-minute range from the morning, very close because it was, what is the range, opening range this morning? Only 80 pips, that's because of the holiday. So a bit, not the perfect example, but we get down here again. Look at what's happening here. We've got the 15-minute range. We've got a daily pivot. We've got a big round number. We've got the 233, which is massive. Plus we've got a 236 fib level. And again, we can see a little bit of range. I'd like to see more sideways, but again, when price breaks out of that cluster, we can see again, although it's a generally low volume, there's a 200 pip move there. And you'll see this pattern repeated over and over. So let's just go to and look at the Tuesday. The Saturday was not that fantastic. I think let's just look at the Friday. Although if we look down here, we can see a little bit of stacking, not major. Of course, there would have been other levels around here. But you can see again, when you get range around a 233 daily pivot and a monthly pivot, those cause the moves. Let's just go back to the day before and see what is happening. I tell you, these moves, when you see the new, you'll know exactly what's happening. So here we go. This was early in the morning. So this was after the open, but look here, we can see this huge move. And again, there would be other levels. We can't show tonight, but look at this block over here. You can see there was a lot of range. The breakout was there. Let's just take the range in that block there. Again, look what's happening. We've got a daily pivot. We've also got a weekly pivot. We've got the 233, another daily pivot. If we drew this down, this is kind of out of range. We can see, but look again, when you see this pattern, that's what you got to look for, especially. This is a good example of range where you got lots of wicks. You see lots of dojis around key levels, and there would be other ones we're not showing you. Those always cause the big moves. And look at this, from that accumulation, rejecting key levels, I mean, that rocketed down. That was 700 pips there, massive move. And we're not going to go too long tonight. I think we got the idea. Let's look at one more day. Let's go to the next day on the Dow, see what we can see here. So here we got, now there would be other things here, but this is what you look for. Just look at this pattern. This is what you want to look for. When you see range like that kind of accumulation, there would be other things here. We've just got a 50% daily fib, and we got also a daily pivot. But this is the pattern you want to see. When you see these levels together, testing. What time was that? That was 3:45 in the morning. There was a big drop. Maybe look one more, just go the day before. And I feel terrible because I can't show you the real things here. So here's the move. Again, this is before the open. But you can see again, look here, a bit of range. When price starts accumulating around here, this is what you look for. We got a daily pivot. That's a 382. You've also got a quarterly pivot, and you've got the 233, which is massive. And again, we get price. Maybe this should be a little bit up here. When you get price compressing around key levels, you always see big moves come out of those. There was another 300 pip move. So I'm trying to look at examples where it's just one level. So generally you see where price often just rejects a single level. You know, you can look in your own time for examples. When it's a single level, there's not always a big move. There's just a single line. Okay, that wasn't too bad. But the big moves always come. Okay, this would have been the open here. Actually, Saturday, yep, that was around the open. So look at, in fact, for the open, there are often a lot of key levels that price tests. So when you see this kind of accumulation before the open, boom, price is going to move. So again, that's basically what I wanted to cover tonight. I don't know if there are any questions, Ty. You've been looking for any questions? Just go back to
there are a couple. I'll start. Where was I? Joseph was asking initially, would stacking reversal thesis apply to all asset classes or some tickers better than others?
Yeah, no, everything. I mean, these principles apply to everything. So
I have some mild thoughts, which will be that the larger the market cap of the asset class, the better behaved, if that makes sense. Like a very low market cap crypto, anything can happen. So I see what you mean. It takes a lot less liquidity to move it. So anyway, that's what I'm saying. Anything big, NASDAQ, gold, Dow, etc., anything, that's highly traded with a lot of volume, you should be completely fine. But Dad.
I think you've answered the question. I mean, we tend to trade. You see, I mean, the more I trade, the more research I do. I think this is what we're going to say more and more into the future. Don't trade multiple things. Choose one or two things maximum. So choose, some people only like Ty chooses gold. I trade the Dow, but I also keep an eye on the NAS because they do behave very similarly. So often I'll choose one or the other. So gold, Dow, NAS, and the Nikkei also during the day. You can choose what you want to trade. But generally, the less pairs or indices, currency pairs, indices you trade, the more profitable you're going to become as a trader. So, find things that work. Backtest, does it behave well? Are there nice moves? What I like about the Dow, for example, if you sit for 2 hours, there's going to be a move. Very seldom will you sit through any time of the trading day, and it won't be a move over 2 hours. You're almost guaranteed a move on the NASDAQ. Gold I'm not as familiar with, and that has big moves, throughout the day. That's why people trade it. But trade things that have moves, and that's why we've locked onto some things that have repeatable behavior. I mean, you can't say you can predict everything, but the behavior is predictable. I mean, big round numbers. I mean, here, for example, we're looking at a chart, 49,600. Look at the price action around big round numbers. Prices always, I mean, this is like so predictable. It breaks one big round number, goes to the next big round number, rejects that, goes to the next big round number, goes to the next big round number, rejects that, down to the next. I mean, this was 100 pip moves all the time. And so find whatever you trade, find something that's predictable. Something that's too volatile, obviously, is going to be risky. I mean, there's no need to trade Ethereum, Bitcoin, XRP, all those kind of things. So my mind's going in another direction at the moment. Trade things that you trade. The more often you focus on one thing, the more successful you're going to be. So I don't know if that answers the question.
No, you're good. I mean, I'll reiterate if anyone has forgotten my story. My first whole year, I looked at nothing but the NASDAQ. My second whole year, only the US 30. My third, what did I say? First NAS, second Dow, third gold. And so then I had a full year looking at only one chart. And now I can bounce between them, but I prefer gold. So unless you're a full-time trader and this is all you're doing, with what you're going to have your hands on, there won't be as much of a reason to have to bounce between. And you'll see why. But that's a decent long answer there for that one. Robin mentioned at 822, there was a good example on the 1 minute chart on gold. So we have long past that. So thanks for spotting it. Vic has asked, are we still, what?
822 on gold on the 1 minute.
There was a something, which I'll just keep answering while I can. Vic has asked, are we still using the 1 minute, 3 minute, and 8 minute with the new system? So I let a little bit of info out and I said that the 1 and the 3 side by side will be our prescribed setup. And way more on that coming, but it is going to be side by side 1 and 3, and you will definitely know why. The 8 still carries weight. Never said that before, but that rhymes. But you will see enough to know what's going on. Dad, I don't know if you want to rip into that example. There are a few more questions. Gold 822. What happened there?
So where's 822? We're 822 in the morning, or?
Well, sorry, he commented at 822 to say that there was. So I'm assuming good example on the 1 minute gold at the moment. So that was at 8:22 tonight PM, our time here. That was 20 minutes ago, 23 minutes ago. Looking at it, are you on gold or?
Is this gold? Yeah, gold.
Yeah.
I'm not seeing.
I mean, I guess it was going sideways. I can't see the bottom.
Yeah. So there was a range here.
Yeah, I mean that's probably what you were talking about at the time. So and just starting to break up above it a bit. So next question, another one from Joseph. Just curious, after the big move down from the prior stacking, what are the chances of further stacking and a continuation down again on today's NASDAQ, for example? Okay, I see what you're saying. You'd have to look at the NASDAQ, and
so I'll just,
I'm looking at it zoomed out and have some thoughts.
I'll just go to the 3 minute and
then a few more questions still as well. But yeah, I'll say it again since you're there. Basically, after the big move down from prior stacking, a lot of orders being filled somewhere, what are the chances of further stacking and a continuation down again onto that? So, I mean, a continuation down means breaking more key levels, but you can.
I mean, it'll be easy to see once you have the new, because that'll give you a good idea.
Yeah. It's going to show you what levels might be in the way that need to be broken to give you the green light, basically.
And you will see how easy it is. Price, we will show you how price follows a very, very clear pattern. It'll be very clear about whether it's going to go down lower or not. Very, very clear about whether price is going to drop or reverse.
I can say this, guys, it is going to open your eyes to seeing things that none of us have probably ever seen before on a chart. I'll say that. So it's so hard to so hard to try and give you an element of sauce tonight without the full meal. But for tonight, that's it. Then got a few from Wendy here. So, but when price tests a level, so multiple times, like 3, 4, 5 times, testing, it can be tricky to know which is the breakout. I've got some stuff I can show you on that. P.S. Although I know breaking a trend line is helpful in that aspect, but when price has been in range for a long time, it's harder to relate it to a trend line. Then there's one more, and you might be able to touch on that.
But look for the lower highs. This is a good example here. Is price? It can be ranging, making higher highs, or ranging, making lower highs. So in this case, we can see it made a high there and a low there. Then it made a lower high, and then another lower high there. So you can also look at, and then you can, Ty always gets these things better than me. If I'm trading, I'm often drawing these things. I'm trying to find out where price is going. So if we looked here, we can see we've got almost a channel that is created here. And we can see this is the breakout. That clearly would be the breakout. We got some multiple touch points there. We got 2 touch points here, and here's the breakout. But I tell you, with what we're showing, it'll be very clear, because the levels we're going to show you are very much big money institutional levels. That once price rejects them a few times, the probability that it's going to go in a certain direction is way easier to pick up. And plus, the basic framework, the background of what's going to be what we're trading off will also make it very clear. So that's why tonight is like 50% of the truth. But when it comes to the Saturday, it's going to be everything that's going to really help you.
Yeah. I'm going to show you my I've got some drawing. Well, I've just put some drawings on and seen something that you've just been drawing. So last question from Wendy there. No, not yet. Okay. There's a couple more questions, and I'm going to revert back to showing some stuff with channels and structure and whatnot. And then one more at the end from Wendy was regarding Tim's comment on the Dow and NAS usually move within 2 hours. Does that apply to all times of day or just best trading hours? So I can definitely comment on that in the sense that over the years, I've noticed different assets move better in different sessions. So for instance, when you understand what is in the Dow, being the US 30, and what is in the NASDAQ, the top 100 tech stocks, etc., you realize there's different interest around the world in different trading sessions. So I've noticed the NAS moves pretty good with definitely with American volume and definitely with London volume. Not usually something I've ever looked at on Asian volume. The Dow historically moves definitely best with US volume, better than London volume. And gold can move at anything. So in terms of that waiting 2 hours a day, I personally have never in history bothered to even look at the Dow during the day in
me too.
In Asian sessions. So
I was talking about the New York session.
Yeah, so I hope that answers your questions, Wayne. So there's definitely like a little bit of a rule of thumb as to which assets perform best at certain sessions, but we can definitely get into that in more detail. Will our screens look significantly different? Yes, but not like in a way that's going to wobble anyone, I don't think. So we'll get to that. Vickers is super excited, yo. I love that. Fire emojis blaring. Tim from Rebrand, but a question here. But so there will be a buy, sell, CT signal pop up or not for these new entries? Yes and no. We're going to be teaching you stuff that goes far beyond the signal, but Dad, I'll let you answer as much as you want. I don't know if we can answer much more than that for now. There will be signals.
I can tell you there's no CT signal.
There we go. Because in retrospect, we're not talking only on trend and counter trend anymore. So there are signals up and down both ways.
Yeah.
And they are not as filtered as much as they used to be, in the sense that we were filtering with version 4 big time for staying on trend. So I'll tell you what, I'm gonna screen share and show a couple of things while we get a little bit closer to 9. I'm feeling inspired.
I'll stop share then. Ty, hand back to you.
So right here, you should all be able to see it. Let me just make this a little less long so it comes out on the recording a bit better. I'm going to compress that to something more like that. I can't see the chat anymore, but this is what we're looking at tonight. This is just the NASDAQ 1 minute chart. There's been a few moves and things. We were looking, I believe, somewhere in here. So let's just roll this open. Dad was just drawing something on you. So what I was saying before with version 4 is that we were filtering out for being on trend, and I'll show you even as an example how version 4 would have still been phenomenal for getting an entry around here. But what I love about where we're going, guys, is we get to start seeing structure a whole lot more and start learning and being able to see things without relying heavily on indicators. So right here, we've got this. I mean, if I turn on the sessions indicator for a second from Lux Algo, you're going to see where we are. London last night, New York over there. And then today we've got a little bit of Sydney, and these blocks might actually even be out. I haven't edited them for a while with the time of day and daylight savings. And then you've got Tokyo, Asia in red, and London firing off over there. So let's just talk about this area right here. It's the NAS, and it's the beginning of Sydney. So, I mean, I wouldn't even really be normally looking at the NAS during this. I'm going to turn off sessions right now and just show you what I see straight away. So obviously we've got this big breakdown. So before that, what would have I been seeing? I would have been seeing already the trend from at least, well, from here, we've got downwards action, grinding up, downward action. Like the more powerful moves here appear to be down to me. So aside from that, 1 minute chart, zooming into this area, we were talking earlier, like when Dad was opening this up, about drawing boxes and identifying ranges. So whether you're going from the top to the bottom of a particular range and just looking for the breakout of that range, high and low, you can start to get pretty fun with channels like we've talked about. So in the last couple live analysis sessions, I've been messing around more with using the channel tool, even horizontally speaking. So when you look at this, now you start to see, okay, well, there was a high, price broke through it, then it retested it, so that became support. And this is not obviously perfectly level and whatnot. And then if you want to, exclude wicks and just go for bodies, you can mess around. But for now, let's just keep it like that. And we can see that price, at least at this point, that wick there is the first point in time that it broke lower than that previous support. And this is just the most simple support and resistance stuff. And so then price did break through it and got a little bit lower. And like Dad said, what's actually happening inside this range? Well, price is going, we've got a low, we've got a lower low, we've got a high, we've got a lower high, a lower high, lower low. So we're just seeing lower highs and lower lows. And this is like the most basic stuff where you're going to be seeing, like, what is price doing? Well, is it making higher highs or is it making lower highs? Is it making lower lows or higher lows? So we see that. That's one thing. That's the range. But before I even try to identify the range, let's just go a step further back. Well, let's just keep that there. No, I want to do something else. Let's just see if I can do that. Yeah, cool. Now, looking left, I see price going up, and I see what would be some form of a channel. Wrong way, something like this. But I want to show you what I can see. So I see this high. Let's say none of this was even here. Let's go further back. Let's go there. Price dropped and stopped there for a reason. You're not going to be seeing those reasons right now just yet. But for now, it stopped there. And look, okay, so price then, where's that? You might at that point have had your channel somewhere around there, because then price came a little bit lower if you were looking at this, and then price broke lower. You're like, okay, sheesh, well, we broke under this. Maybe we're getting sucked into something. If you had a MACD, this is where I'd still like the MACD, because that'll give you some information for what's happening in terms of momentum. But say you didn't, and then you got this low. Well, then I'm dragging this thing down to this point here. And now look at this midline. All this price. Now, say we were only here. Say we just had this point and price broke into this channel. We got a high there and a low here. Say you only had that. That would still be a pretty awesome amount of info considering what's going on higher up the chain. But you could start adjusting this to, look at that. Between just that and that point there, you've got a high retested, a low retest, and then when you broke underneath and pretty much retested it, you were gone. But I really do like to try to drag them further back as much as I can and see if I can connect where price really stopped and tested things, because then, if we keep this, and remember, nothing's going to be always on the pin. Think of price. I remember a mentor once saying, price and lines and support and resistance, they're not concrete walls. Think of them like chicken wire fences, where price likes to stick its fingers through the fence, and the wicks might stick through, but the bodies might not necessarily close. So you don't think like levels can be tested and orders will be filled. So even, thinking over there, okay, well, nothing closed higher than that, but still we had these wicks that we're testing. And so when you're starting to see all this price action, like we've got some highs here, we've got some lows here, price is now just zigzagging up. Remember, this is like the middle of, a pretty terrible time of day to be trading. But still just identifying, the close of New York came up, and then we have the open of the day. And now we're moving towards something. Then what happens? Well, price then breaks out. What was version 4 telling us at that breakout over there? If we wanted to see something, it might take a little while to load. Might be able to drag this a little bit wider. It's loading. And then what do we have? So we're above the 233. Now look, everything you can see is starting to roll over and change its color. We've got red 3 times higher. We've got our main trend zone's already red. We've got a counter trend signal above the 233. But once we previously we've been above the 233, above the times 8, but now we've dipped in properly, broken underneath, come back up for a retest. And at this point now, aside from the CT signal, even the MACD is showing us some wonderful things. Because at the time of that CT signal, we've got a white triangle down. We've got multiple crossovers on that MACD. So now getting a retest in this zone, this MACD is just very, very bearish looking. And coming into this zone, any big rejection from here, I mean, that's approaching that lights out zone. So just starting to see a bit more structure related stuff. And I want to turn off the indicator and just see if there's any other flag patterns. Like, remember, price likes to, in entering these kinds of patterns, do the same thing. So if I was looking at this and thinking, okay, well, price, we don't know what's happened yet, but, leading into this zone, say that was the high-ish and coming down to there, what happened once we broke out of that zone? Yeah, that's pretty cool. There's another tool I was using a little while back, this measuring tool. So check this out. From there, you can measure to there, 180 odd pips. Take that thing, drag it across. I mean, guys, you can't make that kind of stuff up. So this kind of stuff happens over and over and over again, where price will move. I mean, this is basically a bearish move and then a bearish flag and a continuation and some zigzags. So anyway, just want to get us thinking more about identifying those patterns, because when everything's turned off, you're going to start seeing this kind of stuff over and over and over again much, much easier. So I'm going to unshare so I can actually see if there's probably some questions and things. Dad, sorry, you're still pinned, but that's to see if anything else came up that I couldn't see. How much do you let it break out before you consider it a breakout? Great question, Wendy. I'm looking for some structure to be broken and other confirmations. Like Dad was talking about, let me pin myself here at the same time, then you're not just staring at Dad while I'm speaking too. Looking for multiple confirmations. And that's something you're definitely going to hear us say a lot of, like tested key levels. We're just talking about breakouts in this particular time, but you're going to see some levels that would have been tested and rejected in leading into that breakout. Dad, am I saying that appropriately? You're going to be seeing, oh, you're muted, but I think you've got a confirming look on your face.
Yep, no, that's right.
Yeah, so in that sense, you're going to be seeing a pattern. You might be seeing a channel. You might be seeing price stuck in a range. You might see a trend line break, but you're going to be asking yourself, has price rejected some tested key levels? That's going to be the big nugget. So yeah, just wanted to give you guys a little bit of that. What else is on there for that? Need to run. Exciting TNT. See you at the live show soon. Cool. Looking forward to seeing you there. At least that was cool. Yeah, guys. So hopefully that gives you a little bit more. But yeah, reverting back to what Tim was saying about the rebrand, Tim, or Dad Tim, about the buy and sell signal and counter trend. This is, like we said, this is a fundamental shift. Everything about TrendForce prior has been about giving you safe on-trend signals, and this is what I was going to say that I didn't. We managed to filter out a lot of the noise and the bad signals that weren't as safe. And trading is all about probabilities and creating an edge with probability. So by removing so many more of those false signals, we've stacked the odds incredibly in our favor for taking signals with moving averages and crosses and things like that to make it a high probability setup. But it meant waiting a whole lot longer. And so what we have coming is not about being on trend as such. It's about recognizing what price is doing at levels and then knowing what is likely to happen next. And that can be an up or a down. That could be on trend, down trend. I mean, the question of trend is, it depends on how far you want to zoom out. Because you can zoom in and find something that is very much on trend on that time frame, but it's actually counter trend to the daily. So yeah, in that sense, don't want to waffle any longer, but just very, very, very excited for this to get into your hands soon. So trust me, we are working still so hard to get resources and videos and things lined up and to make sure this event's going to be special. So guys, do whatever you can to be there. It is going to be a very special time. I did post that photo in the chat the other night, the other day, of what the day's looking like. And I'll post it in the chat again and I'll refine it, but it's basically this image here, which I will share one more time. It's, we're getting together early so we can have some lunch near the venue, have some quality time together. Then we're going to make sure that we're back at the main venue at church by 1:15, because the 2 p.m. session, 2 to 3 o'clock, that's open to the public. So you're welcome to invite any friends along, obviously, to that. And if they end up, staying for the deep dive, so be it. But then beyond that, we're going to be going a whole lot deeper as to how to really capture everything that this has for us. And what Dad and I are also working on right now is making sure that whatever we have at the live event, we have enough stuff and content to help all of those internationally that can't be at the event be able to run from Monday, Tuesday onwards as well. So that is our divine tension, offering lots of value in person that we can't instantly put online. So give us as much grace as you can if you can't be in the room. But if you can be in the room, I promise it's going to be a really special day together. So just gone after 9. Jeremy, thank you. Awesome stuff. TNT, big thank you. And Nada, thanks, guys. Very cool. Guys, thanks so much for showing up tonight. And yeah, we got live analysis on Thursday morning. And then one more week. Countdown is on. So, Dad, I know you are looking forward to it. Thanks again so much for this evening. And that's probably us for tonight, unless you have any final thoughts.
No, I think that's it. Looking forward to the new. One more week of the old, just about now.
There we go. All right, guys. Well, love you lots. We'll see you in the chat, and we'll see you at the event. Have an amazing evening. Good night.